What's up, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 15 free stocks, Moo is going to give you up to 15 free stocks when you open a new Moo brokerage account. They're going to give you up to 15 free stocks for just trying out their brokerage app. When you put $100 in your brokerage account, they're going to give you 5 free stocks. If you put $1,000 in your brokerage account, they're going to give you 15 free stocks. Now there's a link down in the description box of this video. Go click on that Moo link. Open up your new Moo account today. Go get that free stock. Go get that free money. You guys know that's my brokerage app of choice. That's the one I'll be using for all of 2024 and beyond to transfer wealth in 2024 to myself and to my family. So if you want to rock with me and use the same brokerage app I use, got to get down there to the description box and click on that Moo link. Go get that free stock. Go get that free money. Well, guys, we're going to unpack this great market crash that's getting ready to happen March 11th. I don't know if you guys have been watching YouTube lately, but there have been some videos flying around about this great market crash that's coming. And it's coming March 11th. So you better prepare yourself. You better sell everything. You better take all your money out of the banks. You better take all of your money out of assets. You better bury it in your backyard. Because this crash is not going to spare anybody. Everybody, every American will be impacted. And we're going to unpack that today. Why are people making videos like this? Why are people thinking that this crash is getting ready to happen and with this specific date? How do you know for exact it's going to happen on March 11th? That's the thing that I was thinking about. I'm thinking to myself, well, how do they know March 11th is the date? What do they know? I don't know. So I started doing my research. Pulled out my phone, pulled up Google and said, Google, tell me, will there be a market crash on March 11th? And then Google gave me a bunch of information for me to dissect and get to the root cause and get to this decision people have made that the world, the financial world, is going to collapse on March 11th. And I could potentially lose all of my net worth. Everything I've worked for the last 25 years, down the drain, gone. Got to sell the dream house. Got to sell the cars. Got nothing. Got to go back to work. Got to go back to work for the man. Whoever the man is. I don't know who the man is, but got to go back to work for the man. So let's unpack this. Let's get down to the root cause of this prediction. Well, what was that guy's name? Nostradamus. It's a Nostradamus type prediction. I mean, it's a future. It's the March 11th in the future. We're February 27th. We got people predicting like they're Nostradamus that March 11th, the financial world's coming to an end, right? If you're in the stock market, forget about it. You're gonna lose it all. It's going to zero. Whole stock market is going to zero. It's gonna shut down. It's gonna crash. And why are people saying that? If you're in the real estate market, forget about it. It's gonna crash. Values are gonna plummet. I don't know. Why are people saying that? What's causing all of this? Well, I'm going to tell you today. And I'm going to tell you why people are thinking this. Here's the main root cause of why people think March 11th is going to be an event that is a bigger event than the 1929 stock market crash, the 2000 dot-com bubble crash, the 2008 great financial crisis crash. It's going to be worse than the 2020 March, April stock market crash. Yeah, they're thinking this one that's coming March 11th is gonna those crashes in the past, small compared to this one. Huge. Huge. And why? Well, here's the situation. Have you ever heard of this program? It's called the Bank Term Funding Program. Have any of you guys ever heard of that program? Because I hadn't heard of it. I ain't gonna lie to you. I hadn't heard of it. But that program right there is the reason behind all of this chatter on social media about March 11th being the greatest crash in American history. You will lose everything if you have it in real estate or the stock market. You're gonna lose it all that day, that specific day. And it's all predicated on this program, this bank term funding program. Now, what is that program? And again, guys, I'm no expert here. I'm gonna give you my little, layman's definition for it. So if you go back a little over a year ago, the Federal Reserve Board decided that in order to provide banks with a safety net, right? With a safety net, a financial safety net. In order to provide them with that safety net, they would come up with this program called the Bank Term Funding Program. And they came up with that program on March 12th, 2023. And that program, once again, is sort of like a safety net. It allows banks to borrow money at a low cost, right? And that they can borrow that money for 1 year. Now, why would they give these banks these low interest rates in order to borrow this money for 1 year when you and I are paying really high interest rates for anything we gotta borrow to buy stuff to make the 1% wealthy? Banks get to borrow it cheap, we get to borrow it high. Why did they do that? Well, if you've been following the banking industry over the last several years, there have been some regional, right? Some super regional and regional sized banks that have failed. They failed. Went to zero. FDIC had to come in and take apart the bank and sell it off to other banks. They just failed. So this program was put in place a year ago in order to give banks like that, regional sized banks, credit unions, community banks. Now, you got to be federally insured, right? You got to be a federally insured bank in order to participate in this program. But it gave you access to free money, basically. Basically gave you access to very low or free money. And what was happening was consumers or depositors like you and I started losing confidence in these little bitty banks, these little regional banks, these little credit unions, and we were losing confidence. And guess what was happening? All of you guys, all you depositors were taking your money and going to the big boy banks, the tier 1, too big to fail banks, Bank of America, Wells Fargo, JP Morgan Chase, Citibank, US Bank, right? These too big to fail banks started getting all of these deposits from these little bitty banks. People started leaving these little banks because they were like, these little banks failing. These people, they mismanaging the bank. They're taking our deposits. They're investing our deposit in investments and real estate that ain't panning out for these banks. They losing money. I'm talking about billions and billions and billions of dollars these banks are losing. And that's why you see banks like Silicon, National Bank fail. I think it's our First Republic Bank of San Francisco failed. There's another one in New York that just failed. All of these banks were failing. So the Federal Reserve Board came out with this program, this term lending program, to kind of prop them up, to say, hey, if to meet your needs of your depositors, we're going to allow you to borrow money from us or this cheap money to stay afloat in order to meet the needs of your depositors. And that's just AKA, if your depositors come in there and ask for their money, you better be able to give it to them. So you go come get a loan from us so you can give these people their money when they come ask for it. See, what was happening was these regional banks and some of these credit unions, some of these smaller banks didn't have the money. People would come in and want to withdraw their money because they were panicking and scared. They didn't have the money. They didn't have the money to give it to them. They call it a bank run. When a bunch of your depositors come in all at once and want their money, it's called a bank run. But see, who created that problem in the past? The government created that problem. Why did the government create that problem? Because they gave banks the ability to be able to take your deposits and lend out all your deposits. Just lend them out to make money off of you. They put them in investments. They put them in loans. But the problem is if these banks were putting that money in bad investments, guess what? When time for you to come in to get your money out the bank, they didn't have it. It was in bad investments. The investments were bad, right? They didn't have it. So this program was created to give the depositor really more confidence in these little small banks, these regional banks, these super regional banks, these credit unions. They wanted to provide more confidence to depositors that, hey, we can honor your withdrawal request when you come into the bank. So they created this program, term funding program, the bank term funding program. It was for 1 year, guys. That program ends on March 11th. That's why people saying everything's going to go to crap on March 11th. Why? Because there is still about $165 billion that these regional banks, these super regional banks, these credit unions still owe. They owe $165 billion to this program. And it's getting ready to end in a couple weeks. And I guarantee you, most of these banks can't pay it back. They can't pay it back. That's why people believe all hell is finna break loose on March 11th. Because these banks can't pay the money back. They can't. They don't have it. They can't pay it back. Why? Because of investments they've made in real estate, investments they've made in other types of assets that are not quite panning out. You got to understand how banks make money, guys. Let's just give a little banking 101. This is how banks make money. You come into the bank, you put your money in there. The laws are set up in such a way that that bank can take your money and lend it out. They can just take your money, don't have to ask you nothing. They can just take your little deposit, your little $1,000 you put in there, They're going to take your little $1,000 and they can lend it out 10 times to whoever. People like me, people like hedge funds, people like real estate tycoons, anybody, they can lend it to them. And guess what? They can charge that person an interest rate. The problem is, if these people can't pay, if they lend your money out to a bad group of credit borrowers, if they lend your money out to a bad group of borrowers, or they lend that money into the wrong type of asset, guess what? If they don't get a return on that money, guess what? They don't make any money, but the most important thing is your money is gone. So when you come in and say, hey, Mr. or Mrs. Bank, I want my $1,000. They say, well, we don't have it. We don't have your $1,000 right now. Come back tomorrow. Come back next week. We don't have it. That's what happens. So that's what people are thinking is going to happen now with this $165 billion. Where they going to get it from? I guarantee you they ain't got it in deposits. They probably got it out in assets. They probably out in loans. They probably got it out in other things that they've bought. See, because what these banks do is they, like I said, they make money in two different ways. They make money on what they call interest income, and then they make money on what they call non-interest income. So what is interest income? That's when they take your $1,000 and they give it to somebody and say, okay, we're going to lend you this $1,000. You give us a 7% interest rate. We're going to give you a 7% interest rate for this $1,000. We're going to give you 1 year to pay us back. So every year, every month, that person technically is supposed to pay them interest and the principal. Most of it is going to be interest, little bit principal. Why? Why do they do it that way? Because they make money off of the interest. The principal, they don't, because the principal belongs to you. That's why you see when loans, you always see the interest so much higher than the principal pay down. Why? Because the principal belongs to you. They don't care if they want to get your principal back to you, but they want to get paid first. Right? Banks want to get paid first. Then they get you paid second. But see, it's your money. I'm telling you guys, it's the biggest scam in the history of financial scams is these banks. So they take your $1,000, now, right? They give it to somebody in the form of a loan. They tell that person that they give it to, we're going to charge you 7% for this $1,000. Yep, 7%. Guess what? You think they're going to give you 7%? Nope. They're not going to give you 7%. Nope, not especially if it's in a checking account. They ain't giving you no 7. They're giving you 0. So all that money you're keeping in your checking account, they're giving you 0. They're taking every penny of it. Every penny of that money you keep it in your checking account, they're lending it to somebody and charging them 7, 8, 9, 10%. And then that person who they're charging that 7, 8, 9, 10% to, most of that loan payment on a monthly basis is going to be interest. See, they get paid first, you get paid second, but you're not really getting paid anything because guess what? It's your $1,000 to begin with. It ain't $8,000. So give me one other business that's set up like that, where I can take money from people. That's not my money. I can lend that money wherever and to whoever I want to without asking the owner of that money. I don't have to ask the owner of that money for nothing. I'm gonna get their permission. Because guess what? When you put that money in there, in that little fine print on what they call that personal schedule of fees or that depository agreement, it's already down there, real fine print, that they can do anything they want to with that money. As long as when you come back for it, they can give it to you. That's where the problem came in. They couldn't give it back to people. The money was all out in loans. A lot of these loans were going bad. People wasn't paying them. A lot of that money they took and put in other investments. Remember, they make money off of interest. So they also can take your money and put it into like a 10-year treasury bond, or they can take it and put it into a 10-year corporate bond. They can take it and put it into any other type of investment that generates interest for them. Not only in loans. Now, loans is one of the primary ways they do that, but they also take that money and put it in other things. One of the most popular things they put it in is like bonds. The problem was when they were putting it in bonds, the secondary bond market was doing terrible. Why? Because the primary bond market, the new issuance of bonds market, was doing great because rates were going up. But in the secondary market, when new bonds are issued at a higher rate, then the secondary market bonds deteriorate in value. And a lot of these banks had their money in the secondary bond market deteriorating in value. So maybe I put $1 billion in, right? But now that $1 billion bond that I put $1 billion in, it's worth 800 million. So they just lost $200 million of somebody's money, your money, my money. They just lost it in the secondary bond market because that bond that they bought and put $1 billion in, it's worth 800 million. That's how they start losing money. So when people started coming asking for their money back, give me my money, I need my deposit, give me my money. Can't give it to you. We took $1 billion of your money, guys, and we put it in a bond. The problem is that bond is only worth 800 million today. So 200 million of y'all's deposits we don't have. That's what was happening, guys. I'm telling you, in a nutshell, that's what was happening. That's why this program, this bank term funding program was started. Because of that. Remember, all of this kicked off in 2022. I believe that's when Silicon Valley Bank failed. I think Silicon Valley Bank failed, Silicon National Bank, whatever it was called. Y'all go out and do the fact check, do the homework. Go out there and look on Google. It'll tell you what the real name of it. I think it's Silicon Valley National Bank or something. I think it failed in 22. This program started in 23. And the program started in 23 because of just what I walk you through. Bad loans, bad investments. You put $1 billion in an investment, then the investment goes down to 700 million. You done lost $300 million of your depositors' money. That's what happened. So this program was created in order to safety net these guys. The safety net. Now your big boy, too big to fail tier 1 banks wasn't having no real problems, right? Why? Because most of us started taking our money out of these small regional banks and these super regional banks and these credit unions and stuff like that. We start taking our money out and going to the big boy, too big to fail banks and putting it in there. That's why you see Bank of America had such an influx of deposits. See, these big boy banks ain't having no problems because a guy like me, I'd rather put my money in a big boy bank, too big to fail bank. Why? AKA too big to fail. The government not gonna let them fail. Y'all saw that in 2008. The government wasn't gonna let a too big to fail tier 1. They're not gonna let them fail, guys. So that's where I put my money because I know the government can't let them fail. Why can't the government let tier 1 too big to fail banks fail? Why can't they? Because our whole economy would fail. Our whole financial markets would fail. The whole financial fabric of this country would fail if Bank of America, Wells Fargo, JP Morgan Chase, Citibank, US Bank, if these 5 banks fail, there is no more America from a financial standpoint. So they can't let them fail. They can't. But these little regional banks, these credit unions, oh, they'll let them fail. Oh, they will let them fail. Now, I'm not trying to scare you guys and then get you to take your money out of small banks. That's your business. I'm just telling you where I put my money because I understand how this thing works. If all hell breaks loose, they're not going to let them 5 banks right there fail. All the rest of these little banks, maybe. Now, that's why they created this program for the little banks, right? So they created this term funding, this bank term funding program, but they only gave them 1 year. 1 year. How in the world do you put a program together like that for 1 year? 1 year. And they owe $165 billion. Where are you going to get that money from? What's the likelihood? What is the likelihood On March 11th, 2024, these banks have that 165 billion. What do you think the likelihood of that is? What do you think is going to happen? What do you think is going to happen on March 11th when that program ends and it's still 165 bill? I'm talking about with a B, not mil, bill with a B. That's a lot of money, guys. What's going to happen? And guess who? Let's just say some of them banks can't repay it. Guess who foots the bill for it? Somebody give me a guess. Who's stuck with the bill? Who's stuck with that $165 billion bill if them banks can't repay that money on March 11th? Who do you think is stuck with that? Who do you think then becomes the custodian or the bailout? Who becomes the bailout? That's right. Somebody just hit the nail right on the head. Guess who becomes the bailout? You and me. I'm telling you guys, I keep telling y'all, and you better build yourself some wealth, man, and get yourself out of this trap. These people don't care nothing about you, man. Come on, man, $165 billion. Who do you think is gonna bail out those banks? Us, through our taxpayer dollars. You got that right. We're gonna have to bail them out, $165 billion. So that program is gonna end. Now, some people are saying, okay, that's just one of the problems. That's one of the problems. The bank term funding program, that's the big boy problem, but there's some smaller ones. So they point to recently, you've had a lot of billionaires starting to sell their positions in their companies or in their investments. A lot of big boy billionaires. I'm talking about billionaires like Buffett, right? Just recently sold about $28 billion of Berkshire Hathaway. Or not even Berkshire Hathaway, just his positions. Whatever his positions are, he sold about 28 billion of it, right? Right now, Berkshire Hathaway is sitting on about $167 billion in cash. Warren Buffett, his company is sitting on $167 billion in cash. A lot of people are saying, why? What does Buffett know we don't know? Why is Buffett sitting on $167 billion in cash? What does he know we don't know? Okay, another billionaire, Jeff Bezos, sells about $8.5 billion worth of Amazon stock. Why is Bezos selling $8.7 billion in Amazon stock? What does he know we don't know? What's getting ready to happen? Should I have my money in the stock market or should I be taking my money out of the stock market? What's going on with these billionaires? Not finished. Zuckerberg, Meta, Facebook, sold about 500 million. Okay, smaller position, but still $500 million. Not finished. The Walton family, people who own the majority of the shares of Walmart, or they're majority shareholders in Walmart. I guess you call it that way. Their dad, Sam Walton, started Walmart. So all of his kids, billionaires, they just unloaded $4 billion of Walmart stock. What do they know we don't know? That's interesting. So a lot of people are pointing to that, saying that, listen, guys, billionaires are liquidating. The writing's on the wall. It's going to be a crash. It's coming. The billionaires are liquidating. Why do you think Buffett is sitting on $167 billion in cash? It's coming, right? That's another thing people are pointing to, these billionaires unloading all of this stock. They're turning it into cash and they're just holding it. So you got to think about that. Why are billionaires doing that? Now, let's just give him the benefit of the doubt. Let's just say Buffett had a good year in 23. Maybe Buffett does believe things will soften in the stock market. Maybe he has made a gazillion dollars in 2023, and he's just decided, you know something? So I can make my next gazillion. Let's go ahead and take the profits off the table, leave them in cash, and let's see what the market's gonna do. My goal is to make money, right? That's probably what Buffett is saying. Buffett is saying, I had a great 23, killed it, made a bunch of money for me and my investors. Let's liquidate a good portion of it, sit it in cash, and wait for the next opportunity. Guys, that's not unusual for people like Buffett. That's how they get so rich. This is how they get rich. So it's not unusual for them to liquidate and keep it in cash and wait for the next opportunity. So I ain't mad at him, right? That's why the guy's a billionaire, because he knows what he's doing. How about Bezos? Why would Bezos do that? Well, let's take a look. Bezos is getting ready to move from Washington State to Miami. That's how the folks pronounce it in Miami. Miami. It's really, I call it Miami. They call it Miami. So he's getting ready to relocate to Miami. But you know there's going to be some tax implications for that move, right? There are going to be some tax consequences. So Bezos is ready for that tax hit or whatever it is, right? So that's why, and again, you guys also got to understand, it's Bezos. I mean, he is the founder of Amazon. So all of his net worth is tied up in Amazon. At some point, the guy got to sell something to diversify, right? He can't keep every dime he got into his name. The guy's worth over $100 billion. Most of it is in Amazon stock. So at some point, you got to liquidate. Some point, you got to free up some cash. Got to take care of some taxes. Might want to buy him another a G650. You know, who knows? May want to get him a nice place on the Intercoastal in Miami. Who knows? He's a billionaire. This is how billionaires roll. I don't think there's some covert, Jeff Bezos sold. The guy got his net worth all in his stock of his company. He got to liquidate some of it. So that ain't nothing to be tripping over, right? Same thing with Zuckerberg. Come on, guys. It's 500 mil. Zuckerberg is probably worth 40 bill. It's nothing to him. Why he liquidated it, who knows? But it ain't. Who knows? Who cares? The Walton family. Well, again, can't keep all your eggs in one basket, guys. At some point, you gotta diversify when you got that much of your wealth concentrated in one thing. And for the Walton family, most of their wealth is concentrated in their Walmart stock. So I ain't mad at them. Like I said, most of these people know they had a fantastic 23. I'm pretty sure Walmart stock went up. I think somebody hit me yesterday and said Walmart stock split. Now, I wasn't aware of that because I don't buy Walmart stock. I mean, if it's in the S&P 500, I guess I'm part of it, but somebody said split. I don't know. Did they sell the $4 billion because they knew the split was coming? I don't know, but they're billionaires. They get access to information you and I don't. See, they get access to information you and I don't. They're billionaires. That's a little bit interesting though, isn't it? $4 billion, you go ahead and cash out $4 billion and then the stock splits. I don't know, guys, but that's how billionaires roll. They have access to information you and I don't. I told y'all, that's how the 1% roll. They're going to always have insider information, access to information you and I don't have. They are. That's how it works, right? So I don't think there's some conspiracy or there's some, crash coming because of the billionaires selling off stuff. I think the billionaires are just billionaires. They're doing what billionaires do. They make money, they take profits, and they wait for the next opportunity to make more money. That's what billionaires do. I don't think there's no conspiracy. Now, had Jeff Bezos sold every single share of Amazon, then now you got me thinking. If Zuckerberg sold 60% of his Meta stock, now you got me thinking. If the Walton family completely divested, completely liquidated, now you got me thinking. But not for this little stuff we just saw. Buffett do this all the time. So I don't think there's, Buffett is a smart guy. He says, okay, we had a windfall in 23. Let's sit this one out a little bit and see what happens. Excuse me. So I don't think Buffett is doing anything that he doesn't normally do as an investor, right? When you're already in the enjoyment stage of wealth, guys, you're already a billionaire. You don't have to say, I'm going to stay in this for 10 years. Why? Because you're already a billionaire. The reason we got to stay in investments for 10 years because we haven't got to no wealth. We're trying to create wealth. I guarantee you when any of these billionaires were trying to create wealth, they just stayed in it. How many years do you think Bezos went without making any money in Amazon before he started making money? Many years, guys. Many years. So I ain't mad at a self-made person. Jeff Bezos, self-made. Zuckerberg, self-made. Walton family, self-made. Now, I know Buffett had a family that had money, so I can't say he was 100% self-made, because I think he kind of came from wealth. But some of these folks, self-made, so I ain't hating on them. But does that mean because they selling, I got to sell when I ain't even accomplished to my financial goals yet? No, I ain't selling nothing. Matter of fact, I hope it's a crash so I can buy more. I got a 10-year window here, guys. I got to hold this money for 10 years in assets in order to double my net worth. Go ahead and crash on March 11th. Perfect. All I'm going to do is go right to my cash reserves, take a bunch of money out of cash reserves, and go shopping. So go ahead and crash. I got a 10-year window. I got 10 years to wait. Now, if I'm a guy that says, I'm already at my wealth, I've already built my wealth, I'm trying to live off of my wealth right now, then yeah, I might go ahead and exit. I might do a Warren Buffett on y'all. Take my profits, sit on the sidelines, let me see what's going to happen. I might pull a Warren Buffett on you. But if I'm not at my wealth, I'm trying to build wealth, I would welcome the crash because I got 10 years. So go ahead and crash. Go ahead and crash. Hopefully, it can be the worst crash in the history of crashes. Because guess what? Now I'm going to be able to go ahead and buy NVIDIA at a discount. I'm going to buy the rest of the Magnificent Seven at a discount, deep discount. NVIDIA is trading at $800 a share, man. Guess what? If it crashed and went down to $200 a share, I'd buy it in a heartbeat. I'd take pretty much everything I got and I would buy it. Because I know at some point it's going to rebound. See, when we're in the building stage of wealth, a crash is not all that bad, guys. Because it gives you the opportunity to buy the very best companies at a discount. And then you just hold those companies. Just hold them. I tell you guys, 2 years ago, if you would have bought NVIDIA when it was under $200 a share, and NVIDIA was a big boy company back then. It was a big boy company back then. But the market was down in 22. Everything was down in 22. Didn't matter how big you were. It was just the where the market was. Had you had foresight in 22, guess who had foresight though? Buffett. Guess who had foresight? Buffett. Buffett had foresight. That's the reason he sold now. Because he made his money. He's waiting on the next cycle. But see, Buffett can afford to do that because he's already a billionaire. We can't afford to do that. We're not billionaires. A lot of us are not even millionaires. We're thousandaires, hundredsaires, right? We're hundredaires, thousandaires, not millionaires, not billionaires. So we got to figure out a way to take advantage of this opportunity if the market does crash. If it crashes, fine. I'm just going to go shopping. I want it to crash. Magnificent Seven, FTEC, SPLG. That's how you make money. I made so much money in 2020 at the last crash we had when the pandemic broke out. Made a bunch of money. Back to Warren Buffett. Be greedy when others are fearful. Be fearful when others are greedy. See, that's what Buffett doing right now. That's why Buffett on the sideline. See, Buffett on the sideline right now because people are greedy right now. So he's on the sideline being fearful. Now he will be greedy when others become fearful. But see, when you're trying to build wealth, I gotta be greedy. I got no other choice but to be greedy right now. And I gotta be greedy when the market tanks. I gotta be greedy when the market is going up. I gotta be greedy when the market is going down through dollar cost averaging because I'm broke. I don't have no net worth. I'm trying to get to wealth. I don't have the luxury to say, well, I'm gonna sit this one out like Buffett does. I don't have that luxury. The luxury I have is I gotta earn this money. I gotta put it in the market every single day. It gotta be in the market. Good days, bad days. Now, if the market crashes, guess what? I just ride the dip down, buying those investments at lower prices. Keep buying them though. I keep buying them because at some point, what does history tell us? It's gonna go back up. That's what history tells us. That's what it does. 22, down, 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 down. 22, now this is 22. 2022, down, 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 down. What happens in 23? Up, 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 up. All-time highs. That's what the market does, guys. I keep telling y'all that. You just gotta be in the market though and not trying to time the market. Buffett can time the market because he's a billionaire. He's a billionaire. He knows what he's doing. We don't know what we're doing most of the time. 99% of us don't know what we're doing. So we just got to be in the market. We ain't Warren Buffett. Look, oh, I'm going to be like Warren Buffett. No, you're not. You're not Warren Buffett. The guy's a genius. The guy's a genius. I mean, anybody can put $167 billion on the sideline is a genius, man. That's a lot of money, man. Now, I know a lot of it is investors' money, but it's still a lot of money. And he's probably got it in U.S. Treasuries, or he got it in money markets that's paying him a 5% rate of return on $167 billion. He doing okay. So it ain't just sitting, oh, I ain't earning no interest. He getting interest on it somewhere. Money market, U.S. Treasury bond, overnight, paper, something. He getting some money, right? The point I'm trying to get you guys to understand is stop listening to all this gloom and doom. The stock market ain't going nowhere. It's been here for 100 years. It's going to have its ups and downs. But over that 100 years, it's created a lot of millionaires, a lot of billionaires. I'm one of them. 25 years in the game. Made a lot of money, 7-figure net worth, just by doing exactly what I'm telling you to do. Get in the game. Get in the game. Stay in the game. And you'll be fine. Long term, you'll be fine. Last point that people are pointing to say there's going to be a disaster coming. Right? Last point. Commercial real estate. Did you know there's $1 trillion in commercial real estate maturing in 2024? $1 trillion, guys. Maturing. Now, what do I mean by maturing? That means their loan is coming due, or their interest rate is going to reset itself to a new interest rate. See, in commercial real estate lending, unlike residential real estate lending, commercial real estate lending does not get a 30-year fixed rate mortgage. They don't get that. When you're a commercial borrower and you come into the bank and you say, hey, I want a loan to buy this warehouse. I want a loan to buy this retail center. I want a loan to buy this medical office building. I want a loan to buy this office building. They don't give you a 30-year fixed rate loan. They give you a loan for 3 years or 5 years. And if you're a really, really, really super, super good customer of theirs, they may give you that loan for 10 years, but you don't get a 30-year amortization. You're lucky if you get a 25 or a 20-year amortization, right? So your payment is based on a 20-year loan or a 25-year loan, but your loan maturity date or your loan interest rate is not for 20 years or 25 years. It's normally for 3 years, 5 years, and like I said, if you're a very good customer, maybe 10 years. But a lot of those loans are coming due. Either they're coming due by maturity or they're coming due by interest rate maturity, like loan maturity or interest rate maturity, right? And what's happening is with this $1 trillion in real estate debt, a lot of folks don't believe these owners of this real estate, if they have to go from let's say a 4% rate they have today, but that rate's gonna be 8%. Because you do know commercial real estate loan rates are higher than residential loan rates. So if the residential loan rates for a 30-year fixed rate mortgage is trading at 7.5% to 8%, you can imagine what commercial loan rates will be. Probably higher, right? So a lot of people are thinking this $1 trillion that's coming due is not a good sign. Because a lot of these folks, they believe, won't be able to make loan payments at an interest rate that's double what they're currently paying. They don't believe they can make it work. So what happens to all of that real estate? If they can't make it work, then ultimately the bank has to take the property back or the lender has to take the property back. But when that happens, what happens to the actual value of that property? It decreases. So not only do you have, loans that go bad, but the property value itself goes bad. So it's a huge impact to the overall commercial real estate landscape, right? So a lot of people think that's going to happen, and that's going to force a real estate debacle, which then will affect the residential real estate arena, and then the whole thing will turn into chaos. A lot of people think that. A lot of people saying get out now because of that. But here's where I stand on that. I was watching an interview that Jamie Dimon, the CEO of JP Morgan Chase, and the interviewer asked him about this $1 trillion in commercial real estate debt that's maturing in 2024, and he made a good point. He said, now, we're not talking about mom and pop, duplex, that somebody owned. We're talking about big boy real estate here, commercial real estate, very big real estate. And most of these borrowers, or most of these entities that borrow money from these real estates, they have cash reserves where they can actually go ahead and do what? They can put more equity in the deal. And all that means is they can take some of their cash reserves and put the money into the loan to bring the loan amount down, right? Instead of me having a $1 billion loan amount, I can put in $200 million. Now I got an $800 million loan amount that's going to reset. A lot of these folks can buy down the rate as well, because they have cash reserves. See, unlike residential real estate investors, these commercial real estate investors, especially at the big boy level, they reserve for everything. They reserve for everything. They reserve for taxes. They reserve for capital improvements to the property. They reserve for everything. So they have cash. Simply all they got to do is just take some of that cash, put it into the deal, reduce the loan amount, buy down the interest rate, and keep it cash flowing, right? A lot of these deals, you got to understand, are what they call, triple net leases. So the tenant in that property pays for everything. They pay for the taxes, they pay for the insurance, and they pay rent. It's all wrapped up into one thing. So you got a lot of these owners over here that have really no responsibilities when it comes to paying taxes or insurance or anything. The tenant pays all of it. The only way we get into trouble with this 1 trillion is if they lose tenants. If tenants just say, you know, I can't make it anymore. I'm consolidating. I'm shutting down locations. I'm at the end of my lease. I'm not renewing that lease. Then I think you get some of this 1 trillion in trouble. But as long as their tenants are there and they got cash to put in the deal to right size it, they do. Now, here's another thing they got on their side, these owners of these properties. Their partner is the bank. You got to think about it, guys. Of this $1 trillion, banks have lent about 500 million of it. Just regular banks. So regular banks are their partners. Banks are not in the business to foreclose on these large commercial properties when they know there's no upside to it for them. They're going to do everything in their power to allow these people to operate these properties, even if they got to do some type of, deferral of interest payments or something. Guys, I was in the banking business for 25 years. I was a commercial lender for about 15 of those years. Banks don't want to take these properties back. They're not in business to be landlords. They're not in business to be in the real estate business unless it's their properties that they're running branches out of. I mean, they're running, operations out of. They don't want to go to clients and take properties back from them. They're going to do everything in their power to get these people the best and fairest terms they can get them so they can stay operating and the bank can continue to get its interest payment. Remember, earlier I told you banks make money from interest and non-interest. They have no incentive to cut off the interest from a loan. They don't want to do that. So this whole notion of this $1 trillion is coming due and everybody is going to have to get foreclosed on, that's the last thing these banks want to do, is foreclose on these people. They don't want to do that. Now, if they have to and if their hands are tied and they just eventually got to foreclose, they will. But that's the last course of action they want to take. Why? Because there's no upside for them. No one is going to buy that property from a bank for market value. Nobody. And the bank knows that. They know that. So they don't want to be in the business of taking properties back, especially at this level. They are in the business of trying to work this thing out so that they can continue getting their interest. And guess who money they gave these people to buy that property? Your money, because you're the depositor. What do you think these banks get this money to lend this $1 trillion? From you. So you should have a vested interest and keep your fingers crossed that these people make it, because it's your money that's on the line. Your deposits are the one they gave them to buy the property. Keep telling y'all these banks ain't stupid, man. They take your money. Oh, my bank loves me. They give me donuts and brownies when I come in every Friday. Come on, guys, really? These people taking your money, lending it out to people, collecting interest on it, and ain't giving you nothing. And then when you come to try to take it out, in some cases, they don't even have it. Have you noticed when you try to walk into a bank and you try to get like 10 grand out or 15 grand out, and they be telling you, oh, I ain't got it. We ain't got it. You gotta give us a week in advance. That's why. They don't keep that money in the bank. That money's gone. They don't let that money out. That money is collecting interest somewhere that belongs to them. You could barely walk in there. You might have millions of dollars in that bank. Guarantee you. Try this. Go in there one day and ask for $50,000 in cash and see what they tell you. See what they tell you. Go in there and ask for $5,000 in cash, $10,000 in cash. A lot of times they're going to tell you they don't have it. Give us a week. Give us 2 days. Come back. I'm just telling y'all, guys, these banks do not have your best interest at heart. They don't. All I'm telling you is they're a necessary evil. I have to use banks because that's how our financial system is set up. Now, you could go ahead and don't use no banks and put all your money in crypto. You see how that work out for you. You can take it all out, put it in crypto, put it in your wallet or somewhere. You know what has happened over the last 2 years in the crypto arena with these crypto lenders and these crypto exchanges. They ain't no better than banks. Matter of fact, they worse. They done stole billions of dollars from people Billions over the last few years. You know how many people done lost money in crypto by putting their money in crypto exchanges and crypto lenders? With the lure of, we're going to give you a 20% return. We're going to give you a 30% return. We're going to give you a 40% return. No bank will give you that. Guess what happened? Billions and billions and billions and billions of dollars lost to failed, bankrupt crypto lenders and crypto exchanges. Keep your money in the bank, man. Just know where you're keeping it. Know what your limits are. Know what the status of your bank is. If you don't, go online, research them. And if you're afraid, go to a too big to fail. That's what I do. I just go to a too big to fail. But I got to have my money somewhere, right? I'm not going to have it under my mattress in my bedroom. I'm not going to put it in my safe at my house. Oh, I keep money in my safe. No, I'm going to keep it in a traditional bank. I'm just going to keep it in a traditional bank that I believe is too big to fail. That's all. And I just take my chances with that. These little super regionals, these regionals, now I might go get loans from them. I'll go get loans from a credit union. I'll go get loans from these community banks. I'll go get loans from these regionals. But for me personally, and this ain't got nothing to do with what you do. You do whatever you want to do. But for me personally, I got to keep my peace of mind money that I keep in the bank. I got to keep it at a big boy bank. That I just do. Because I don't know what's going on with these little regional banks. Because, see, it's very competitive, guys. They're trying to make money off your money. And they're doing whatever they can at the regional level to do that. And sometimes they just make bad decisions. And there ain't no real oversight until they go bad. And that's when the FDIC comes in. There ain't no real oversight, right? There ain't like it's a publicly traded company. Because most of these regional banks, most of these smaller banks, are community banks, they're not public. They're privately held banks that individuals own them. It ain't like it's a publicly traded bank like Wells or B of A or JP or Citibank or US Bank. These are publicly traded banks, right? With shareholders who don't play around, that watch every single move they make. These shareholders watch it. You don't get that at the regional bank level. You don't get that at the community bank level. You just don't, guys. You don't get the oversight. So therefore, before you know it, they on the news, and you like, oh my God, that's my bank. They on the news. I'm going down there tomorrow. You get down there, door closed. You can't help you. Got to call the FDIC. And that's when you learn. So just be careful out there. I'm not telling you not to use whatever bank you want to use. I'm just telling you what my preference is. Also, my preference is to keep my money in the market, right? I'm trying to keep my money in the market, so I don't need to be keeping a lot of money at the bank anyways, other than my emergency fund. The rest of it, if I'm in the building stage of wealth, needs to be in the market, earning, multiplying, so I can get to my pot of gold at the end of the rainbow. I don't need to be with all my money in the bank like, oh, golly, scared to death and I'm broke. All I got is that. No, I need to be multiplying that money through paper assets. Don't be afraid to put your money in paper assets, guys. If you got a long-term outlook, like I said, wealth transfer blueprint is for 10 years from me. I want to double my net worth. I'm not going to double my net worth being scared and on the sideline. I double my net worth by being in the market, accepting some level of risk. I got to accept some level of risk. I'm okay with that. I'm okay with that. That's why I put my money in big boy ETFs, big boy individual stocks. Magnificent Seven. Bam. Right? So all I'm telling you guys is these are the reasons why people are thinking March 11th is going to be total chaos, total collapse. That's why people are thinking that. I disagree. I don't think anything's going to happen. This is what's going to happen on March 11th. This bank term funding program is going to end. But guess what? The Federal Reserve Board is going to give these banks as much time as they need to pay them back. That's the whole point of it. They wanted to save them. They didn't want them to fail. You think they're going to just make them fail now? No. They're just going to give them more time. Matter of fact, they might even extend the program. They may come out on March 10th and say, you know, They may come out on March 10th and say, you know, we're going to extend this thing for one more year. We're going to give them till March 11, 2025. They're going to do something to bail them out, right? They have to. Why? Because your deposits are on the line. And see, the 1% know, without you, they can't make no money. So they don't want you scared and afraid now. They want you out there spending. They want you spending. So they're not doing anything to upset your spending. They got you in the matrix. They want to keep you in the matrix. They're not going to get up. Let's extend that program because we don't want to upset the American people. We don't want to upset depositors. We got them in the matrix. Let's keep them in the matrix. We can't allow them to get out of the matrix because if we let them out of the matrix, who's going to buy our products and services? Who's going to keep us in private jets? Who's going to keep us in luxury villas all around the world? Who's going to keep us in 5-star hotel resorts when we go vacation? So the 1% is not going to allow this bank term funding program to go haywire. They're not going to do that. They're going to give these banks more time to pay back this $165 billion. They're not going to let anything crash. Yeah, will the stock market take a dip every now and then? Yeah, but it might do what it did in 2022, but I doubt it. Because you got to understand, guys, the Federal Reserve is getting ready to reduce these short-term interest rates. And when they do, stock market goes up. Rates come down, market goes up. That's how it works, guys. Why? Because now people got access to cheap money that they can borrow and put in the market, just like they did in 2020. When all that free money was available, guess what people did? A lot of people took that money and put it in the stock market, doubled their net worth. A lot of y'all took it and spent it to double somebody else's net worth, but there were some people that doubled their own net worth. A lot of y'all doubled other people's net worth because you went out and bought stuff you didn't need. But the 1% needs y'all for that. They need us for that, right? So all I'm telling you is don't worry about no crash happening on March 11th. It ain't happening. It's all propaganda. It's all a way to get you to click on the video and watch some YouTube videos. That's all it is, guys. Listen, anytime you listen to these guys on YouTube, take it with a grain of salt, even me, right? I'm not telling you that I'm the Holy Grail. I always tell you guys, go out and do your own homework, fact check it. I'm just a guy on YouTube who's trying to give you the best information based on my knowledge, right? I'm not finna sit out here for 10 hours and research every little thing I talked about today. I'm not doing it. You can go research it, but I'm just giving you my opinion. My recommendation is figure out what your financial game plan is. And I'm telling you, assets are the only way you get to freedom. You better find an asset. Me personally, I'm gonna stay in the stock market. I don't care what happens on March 11th. Matter of fact, I hope it go down like I kept telling y'all. I hope it go down. I need another 2022. If I can get another 2022, I'll take it. I'll take it because I know the following year, the year after that, they go into the moon again, and that's where I make my net worth. So don't be afraid if the market bobbles a little bit. That's what it does. But look at the 100-year history of the stock market and tell me if it's successful or not. It has been successful, guys. And it will be for the next 100 years. Why? Because that's where the 1% keep their money. Oh, real estate is going to crash. No, 1% keep their money in real estate. It's not all going to crash. Some of it might crash, but it won't all crash. That's where they keep their money. They keep the money in the stock market, they keep their money in real estate, and they keep their money in businesses. Those are the three places the 1% keep their money. Why wouldn't you keep your money there then? That's where I keep my money. I keep my money in real estate, I keep my money in businesses, and I keep my money in the stock market. And a little bit in cash, just so that I could sleep at night. You better figure out something, guys. Time running out. 2024, we're almost in March. We're almost in March. And for you guys out here who ain't finalized your game plan, you're running out of time, man. You are running out of time. No one cares if you think it's corrupt. No one cares, buddy. No one cares, buddy. No one cares what you think. People out here getting rich, doubling their net worth, getting to their pot of gold at the end of the rainbow. Don't worry about no corruption. Corruption is a part of life. That's everywhere. That ain't just in finances. That's everywhere in the world there's corruption. Who cares? No one. What I care about is getting to my pot of gold at the end of the rainbow so I can secure my future, my family's future financially. That's what I care about. I can't worry about the corruption in the world. What can I do about that? Nothing. I can't do nothing about the corruption in the world. What I can do is take my money, put it in assets that build wealth, and just do that over time and get to my pot of gold at the end of the rainbow. That's all I care about. All the rest of this crap they trying to get y'all to think about to keep you what? In the matrix. See, when you worried about corruption, I'm worried about who's going to be the president. I'm worried about this. I'm worried about who fighting over in Afghanistan. I'm worried about what the Russians doing. They want you to worry about all of that. So guess what you can do? Stay in the matrix and make them rich. They don't want you thinking about your own things that you can control. They want you thinking about things you can't control. You can't control none of that stuff, man. Why think about it? You can't control any of it. Control what you can control. Stop worrying about what other people doing. Control what you can control. And we'll be much better off in the world if people would do that. But we won't do it. We won't do it. We'd rather worry about somebody else's family before we worry about our own. See, that's our problem. We'd rather get in other folks' business and try to fix their business and fight for them and advocate for them, but won't advocate for your own family. Won't fight for your own family. That's the problem we have in this country and around the world. We too busy fighting for every other cause, but we won't fight for our own cause and our own family. We don't even know what's going on with our own kids. We don't even know what's going on with our own financial situation, but yet and still, I'll jump online and fight tooth and nail with somebody. They say something about my favorite artist or my favorite movie star or my favorite athlete or my favorite politician. We'll fight to the ends of the world, run our blood pressure up and everything else, fight for somebody else who don't even know us. Guys, you better get your priorities right. You better get laser focused and get in tune to what's going on, what's really, really happening here. Haves are spreading out. Have-nots are spreading down. The wealth gap is widening. You're going to have haves and you're going to have have-nots. You're going to even have a middle class. You're going to have poor people and rich people. Wealthy people, poor people. You won't even have a middle class in 30 years. There won't even be a middle class. They're going to be people who have assets, people who don't. That's what it's going to be. No middle class. So you better figure out which side of that spectrum you want to fall on. You can sit here and worry about all this crazy stuff that you have no control over, or you better worry about something you do have control over, which is building wealth, which is earning, keeping what you earn, and then multiplying it. That's what you can control. That's what you should be focused on. Not all this other stuff out here that don't got nothing to do with you, but you want to insert yourself into it. It's just, I just think it's a waste of time. Well, guys, lock it in with a thumbs up. We're getting ready to tap out. I appreciate y'all rocking with me this morning. It's been fun. It's been real. Hopefully, I've walked you guys through what I believe is just nothing but propaganda. Ain't nothing happening on March 11th. We're going to roll as we've been rolling. We're going to go get this bag. We're going to go get this money. We're going to build this wealth. We're going to control 100% of our time. We're going to control our own financial destiny, right? We're going to get back our financial power. But only way we do that is we got to be invested. We have to be invested. Don't let these people trick you to stay on the sideline. Lock it in with a thumbs up if you don't mind before you tap out. I appreciate y'all rocking with me this morning. Again, if you want up to 15 free stocks, Moomoo is going to give you up to 15 free stocks when you open a new Moomoo brokerage account. When you put $100 in that brokerage account, they're going to give you 5 free stocks. You put $1,000 in that brokerage account, they're going to give you 15 free stocks. There's a link down in the description box of this video. Go click on that Moomoo link. Open up that new Moomoo account today. Go get that free stock. Go get that free money. Then you'll be ready to do what? Copy my plan. Rock with me and let's build wealth over these next 10 years. If you want my wealth transfer blueprint, send me an email. My email address is down in the description box. Send me an email and say, Richard, I opened my Moomoo account. I funded it. Send me that wealth transfer blueprint so that I can start building wealth in 2024 and get to my pot of gold at the end of the rainbow. And I'm going to send you that video that contains those 3 investments I'm going to be buying. All big boy, heavyweight investments with a proven track record of multiplying money. So if you want that, email address down in the description box. Also, if you want to, guys, follow me on Instagram at Richard Fain Millionaire Mentor. Just be careful on Instagram. A lot of fake Richard Fains over there. A lot of fake ones. So Richard Fain Millionaire Mentor. Spelled correctly. No missing I's or missing L's or double R's or all of that crap. It's just Richard Fain Millionaire Mentor. If you want to follow me on Instagram, I do put some stuff over there, little short reels and things like that to keep it funky, just to keep you guys in tune, to keep me upbeat, to keep me motivated. That's where I put that kind of content. So if you're interested in that, go to Instagram and follow me there. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'm gonna catch you on the next video. Peace.